What's going on, guys? It's Garrett here. Hope everybody's having a fantastic day. Me myself personally, that's not the best day, but I mean we had a fantastic day trading. There's no denying that. With the gold analysis coming right up into our take profit, but right in this line here, you can see it went up and we found some resistance, and we stopped right where we had predicted. So that was a fantastic trade. I closed out my full position right up in this area. I didn't literally get the full take profit. I did it like right here when I saw we were posing some resistance once, and then what happened was this candle came up into here. It had come back down to here, and about in this area I took profits because I didn't want to mess with that wick. I just want to say, okay, let's take this before we might get a reversal off that area. So that was good. Because for some reason my take profit didn't initiate, so that's kind of excuse me, I'm lucky I kind of got out where I did. Other than trading, I still have this cold. You guys all know the feeling. You wake up, you go to bed feeling great, you wake up and all of a sudden, your throat's super scratchy and you're congested and you're like, okay, what the hell? Where did this shit come from? And then the next like 4 or 5 days you feel like god awful shit. So or not god awful, but you're congested and your head feels heavy, and it's very frustrating. There's not much you can do about it. But anyways, I wanted to kind of refrain from analysis tonight. I'll put up a watch list via spreadsheet, which is that's what I'll do for tonight. But I want to talk. A lot of people are asking me, okay, Garrett, like why are you not really a fan of using indicators? And yes, I have Bollinger Bands on my chart and a 20 exponential moving average. Let me tell you something though, is like I use these purely, they are not decision makers for my trades, okay? Decision makers for my trades are price action, because indicators are just too complicated in my opinion. It's not that I can't understand them. It's more that I don't want to understand them, and that's my personality. Okay, I don't want to have to check. I always find myself, realizing that this trade that I took because of this indicator was just there, but there was also simple price action right behind that trade that would have given me the exact same analysis and the exact same result. Another thing that I gigantically hate is oscillators. That's just my personality, and I'm coming on here to tell you guys kind of why I do that, why I think price action is the best, and how I think it could help you by maybe even eliminating some of those indicators on your chart. Okay, well, not every single, like when you have 10 flashing in, that's why, when I see someone on social media who has a 20 EMA and a 50 EMA, a stochastic, an RSI, a MACD, Bollinger Bands, and parabolic SAR, all on one chart. It's like, dude, what the hell? Why do you think you need that many indicators just to get by in trading when the answers are lying in price action, okay? Oscillators distract from price action. Guys, right here is what matters, okay? You see these candlesticks, zooming in, zooming out, analyzing price action. Deciphering these moves is what's important. Anything that takes your mind off of that is in my opinion, is just a distractor, and you have no need to use it, because half of the time the move has already happened by the time the stochastic crosses over, or the MACD, or whatever the hell the MACD does. I barely even understand the MACD. All I know is that it stands for moving average, convergence, divergence, and I've had some people show me some techniques that work for them. Okay, I get the basic understanding of the MACD and of how it can be applied, but advanced techniques, I am not your guy with that. But and that's just my personality. If something is distracting you from the price action, then it's a distraction, and it's a distraction in and of itself, and it's nothing else but a distraction. The good traders are the ones who can predict moves like this near the bottom and and decipher why they're happening. This is my own personality in terms of trading. I am a price excuse me. So this maybe not be yours, but and I might blow some of your guys' mind when I say this, and just the amount of accuracy that's within this statement. When you start to trade, okay, you start adding, you add two indicators or something like that, or you look at price, and you take a loss, okay, so you're like, oh my gosh, I took a loss, this is so bad, because you can't accept one loss. You're like, oh, I lost, and the feeling of losing money is a bigger feeling of loss than the feeling of gain is when you make money, if that makes sense. And when you take those losses, you begin to go research indicators everywhere. So say you have a or a parabolic SAR and a 20 EMA on your chart, and you trade that, and you trade when parabolic SAR gives a bullish signal and price crosses over the 20 EMA. Okay, let's say you take a loss on that system. Okay, you take a loss and you're like, oh my God, your risk management wasn't that good, so a lot of your profits are gone. So you're like, oh gosh, this is bad. I need to figure out what happened. So instead of maybe adjusting your risk management or adjusting your risk or changing your risk plan, instead what you do is you go look for an indicator that would have told you to not take that trade, or to take that trade differently. So you have the 20 EMA and the parabolic SAR on there right now, and you go and say, okay, let's see what the stochastic would have said, okay? And let me tell you something that's interesting, okay? RSIs and stochastics will give you bullshit signals in trending markets. Stochastics and RSI do not work, in my opinion, until you get to reversal points, okay? An RSI and a stochastic will hover in an overbought area in a upward trending market for a long, long time. I bet you in the Dow, look, that's a perfect example, okay? Let's look on the daily on the Dow, and let's put in a stochastic. Where's the stochastic at? Stochastic, okay? So look at this here. Look at this, okay? The stochastic will say, okay, look at how long we hovered in the overbought areas, okay, after the election. Boom, 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 boom. Because we're in an uptrend, okay? There's nothing wrong. It doesn't mean we're actually overbought. I mean, at this point, we're overbought, and we're going to be getting a correction soon. But, none of these crossovers were successful crossovers whatsoever. And your accuracy rate begins to become low and much lower than usual. And so you hover, and as it's trending upwards, you're like, oh my gosh, the stochastic is up here, way up here in the overbought area. I'm not going to be buying this. When if you bought back here, you could have made a shitload of money. Okay, so and now I don't think they're totally worthless, guys. Don't get me wrong here. So what I believe is the best way to apply an oscillator is at its reversal points. Okay, say a stochastic is beginning to, or in a range, okay? In the range is the perfect. So you have resistance up here and support down here. A basic stochastic crossover could yield a decent long position. But in a trending market, research it on your own, guys. You're going to get loads of divergences until a real reversal within price happens, if you understand what I'm saying, it doesn't work all the time. These overbought signals were pretty close to worthless. We all know that the real trades were the buys, okay? The buys were here, and a lot of times on these pullbacks, your crossover didn't happen till almost, a third of the move was done, or your crossovers didn't happen till, this was over. When your trade should have been in this area down in this here when you were starting to get that initial reversal. Excuse me, guys. I'm sorry. Let me get a drink here. All right. And something else that's interesting, okay? All of these indicators that you guys use, I've had people say, bro, you can't do this without indicators. You're so full of shit. You can't do anything, man. You're such a liar. This is impossible. If you think you can just trade with price action, you're insane. These people that just sound so idiotic. These are A1 steak sauce idiotic people, and that's just how straight I can be with you. There are just some stupid people. They say some stupid stuff, and and it's awful, and it makes me wonder why in the world do you even get to trade? Because you do not. When someone like that does absolutely nothing but plague it. But hey, Elegante FX. I mean, he needs Elegante FX. So I mean, like, he needs someone to reverse his mind. He needs, and we'd be happy to do that for him. But in the end, when people are trading price action, whether it be indicators, whether it be a moving average, a stochastic, a Bollinger Band, a parabolic SAR, an average directional index, you are trading. Those are all based on price action. Those all get their data strictly from price action. Therefore, by the time any move happens in price, you are getting screwed over in terms of your entry because the entry has already happened. That's what I'm saying. And, you begin to overcomplicate it to a point that, oh, gosh, look, I just took a loss on this stochastic crossover. Shoot, let's see what would have helped. Let's see if any of these indicators would have helped me. I'm going to close my eyes. I'm going to go random, boom, click. Let's see. Okay, let's see if this, what the hell is it? This pivot reversal strategy would have helped me. Well, this is just an absolute weird thing that I've never heard of. So I'm going to assume that I clicked the average directional index. All right, so let's say now you think this is what's going to save your life, or now you could take a loss on that, and then you add what the hell? Let's see. I mean, then you add envelopes. Okay, no, gosh, I forgot trading view as a restriction. Anyways, but you know what I mean, and then you start to overcomplicate it, and just look at how ugly this chart looks, okay? This is just ugly. So that's something that as you're going throughout Elegante FX, as you're going throughout the courses, and you see that we have a course on a lot of indicators. Those are building blocks for you to decide if you want to pursue. You can research an indicator. If you think stochastic is something that will help you, and it helps you, and it works for you, then keep doing that. I'm telling you simply why I don't like most indicators. Okay, relying on indicators also, I mean, it leads to lazy analysis. And what I mean by that is when I begin to rely on the moving averages, or I begin to rely on the stochastics, or I begin to get lazy in my price analysis, and I miss basic price action setups, or I miss a basic signal that was telling me, hey, this is not a good trade. This is a simple reason why you should absolutely not be taking this trade. And I feel like when you begin to rely on those indicators that we talk about, that's when it can get you get lazy. Learning price allows you to catch those intraday trades. Because why? I mean, there are some indicators that I've tested, guys. They are almost close to worthless on lower time frames. Like, price action allows you to catch most moves on any time frame. You want to be a 5-minute E-mini S&P futures day trader, do that, and price action works beautifully on futures markets and forex markets. I think they're the best there, and it's actually impressive how nice price action works. I mean, just look at this basic intraday price action right here, okay? I mean, so excuse me. All right, we got a downtrend. We're in a bear market. On the 5-minute, to remember that, keep that in mind. So wick, trend line. We break that. We break the high right here. Form a retracement, decent scalp. Retest that trend line multiple times if we pull it back down. Multiple times. Go long. Okay, we're getting scared here. Maybe a little bit worried. Boom, we break the high. I mean, it's just the basic market structure techniques that we apply, guys. Okay. Boom, another trend line right here. It's just price action is applicable to any time frame, and that's something that I think is a huge advantage. But the real advantage that you get is when you can piggyback the institutions and you get an idea of what they're going to do early on in the day, so you have an idea of what the range is going to be, and you basically can piggyback the banks, okay? Because they're the ones that cause every single thing banks, governments. They're the ones that cause these, okay? These major price moves. So guys, seriously, I wanted to come on. I wanted to give you my insight on why I love price action so much and why I don't think indicators are something you need to rely on. I do believe I could get by trading if I took off easily by taking off if I took off Bollinger Bands and moving averages. So seriously, guys, the only reason I use Bollinger Bands is because simply it helps with my entry signals. Okay, so that's pretty much my main focus with Bollinger Bands. So guys, seriously, stop passing up price action. That's literally mostly what I'm going to be talking about in all of my video watch list and watch list. So with that being said, guys, thanks for hopping on the video lesson, and I'll see you tomorrow night or tomorrow or on the next video lesson whenever it comes out. Everybody have a good day, and I'll see you tomorrow.